Okay, fam, welcome back. So today we're going to be going over the buy, sells, and dividends for the week of September 22nd through the 28th. So with that being said, let's get it. All right, so I'm going to go over the M1 Finance portfolio first. So you guys can see here the dividends. We got 762 from RA, 13 cents from EFC, $9.26 from USOI. That's actually quite large. I was really not expecting it to be this big. And then Main Street basically just a penny. So I'm not sure what's going on here with some dividend deduction, but yeah, it's pretty much just a penny. So we used to have Main, but then again, there's other dividend paying ETFs out there that do pay more in yield. It depends on what you're looking for, whether it's the stock going sideways and the yield being high, or the stock going up and the yield being low. Again, it's all based on investor preference. Okay, so I'm gonna go over the trades here. There was actually a trade or a couple of trades this week. So first one is that we got out of Enbridge. Looks like it was actually at a profit. Hold on a second. I didn't realize this was even part of this. Okay, yeah, so apparently sold this one for $3.49 in profit. Okay, so I'm going to have to add that in there. I didn't realize that was actually this week. So basically sold out of that, got out of ACP. Again, ACP is at an extreme discount. I'm going to go over that in a minute. So the other thing here is basically you guys know how we do the repositioning for dividend paying stocks. Okay, whenever we take profit on the stock that's in profit that pays dividends, we'll take the entire amount off the table. Basically, take all of the profit off the top of that move plus 5 to 10% or roughly the initial capital from the position that was in profit, and we'll put it into another dividend paying stock that's not in profit. So that's what you're seeing right here. Okay, so got out of PDI, moved roughly about 5 to 10% of that money plus the profit over into ACP. So that's what's going on here. And then, yeah, so that's pretty much that in terms of passive income here. So that total is $17.02. Again, this does not include the profits. So the profits from the dividend paying stocks from Enbridge was $3.49. And from PDI, the profit we took on that one was $56.03. Okay, so I'm actually going to go over this with you guys to show you what I mean. What do I mean when I say overvalued and undervalued? Well, if you guys think we're doing TA on just crypto, you'd be mistaken. So here's what the chart of ACP kind of looks like. Okay, this is a monthly paying dividend. I forget exactly what this is. It's like some kind of BDC or CEF or something like that. So it's had a very stable payout and passive income, 10 cents per month for the longest period of time. I don't remember exactly how long it is, but it's been years and years and years. But the point I want to make here is that this thing is kind of sitting at macro support. Okay, so it's still below the EMAs. It's at macro support. We're getting this potential golden cross scenario going on here. And also you can see some bullish divergence. So the RSI lows are getting higher here, whereas the highs on the price was getting lower. That's what's known as bullish divergence. And the Fed's cutting rates. As soon as the Fed cuts rates, a lot of these monthly paying dividend stocks like Horizon, JEPI with JEPI, PDI, Main, NUSI, PFLT, CRF, CLM, BSTZ, BITO, ACP. BITO is kind of an outlier because it's Bitcoin, but all of these kind of lower yielding, they're not like super high yielding, like maybe about 8 to 15%. Monthly paying dividend ETFs and stocks, they usually, when the Fed cuts rates, they usually go up in price. So the thing I want to point out here is that it's kind of sitting at the all-time lows. Okay, so this thing is literally lower. Well, according to the chart history here, is lower than it's ever been. Okay, so the last time we saw even close to these lows was around March 2020. That tells me this thing is extremely discounted. Okay, so if I look from this previous swing high here, March 2023, you can see this thing is still down roughly about 25%. Okay, swing high to swing low, roughly down about 37.5%. Whereas if this thing goes back to this previous resistance by itself, going to be about a 33% gain. Again, that does not include the dividend that they pay, which I think is roughly about like 15 to 16%. I mean, the 10 cents on a $6.50 stock, that should equate to somewhere around like, I'd say probably the upper teens. Um, so, I mean, yeah, I mean, the Fed's cutting rates when they go back into monetary easing. The price is probably going to be higher up here. So you can see April of 2021, kind of that before the market peaked out in November of that year. This thing back here was already sitting at $12.60. Pre-pandemic, this thing was up in kind of the upper 12s, 13s. Now, if I do a chart comparison between this one and PDI, you guys can see the reason why we made this move here. Okay. So you can see that PDI is the opposite. So instead of sitting at support, it's sitting at resistance. So why did we take profit? Well, ACP is sitting at support, PDI is sitting at resistance. Um, and it's already up quite a bit from the lows. I think our average was kind of in the 18s or 19s, somewhere in there. So we were already up quite a bit, roughly about 10%. And this thing from the bottom of the support zone to the current price is already up a massive 32%. And you guys can see the last time we got into this zone was basically back during the pandemic. So it has been a while since this thing has hit this zone and is starting to move up. And you can see right around the same time ACP had hit its recent local highs, this thing was at $30. Okay. So it was actually quite expensive compared to what it is now. And pre-pandemic, it was at $34. So, yeah, we're basically just going to put 95% of the capital back into here. Usually, we'd kind of want to buy this thing as it comes down. But in this particular case, I think PDI will probably continue to go up because you can see basically everything looks bullish here. The indicators look bullish. The EMAs had a golden cross kind of back in this area and prices pushed up. Okay, it got above this downtrend line. So that's a pretty strong indication to me that this thing may have a chance of at least going to the top of this range, if not breaking out of it entirely. Again, I think it kind of depends on how fast the Fed cuts and how quickly the labor market rehires people, which I think is going to be pretty quick. Again, I believe it's going to be in lockstep with Fed rate cuts and also how fast the economy recovers, because it is slowing, but it's not like completely collapsing. So if they can catch it at the Knicks, which I believe they will, we should get that soft landing. So that's pretty much what you guys can see as to why PDI is kind of, we were looking at taking profit on this one. And we do pretty similar things with the rest of these, okay, even though we're not positioned in them right now. Like you can see EFC, pretty obvious time to buy down here in this zone. Pretty obvious time to potentially look at selling kind of up here in this 14 area, 1450, somewhere in there. And it's kind of just in between. So golden cross, it looks bullish, all that jazz. So we do the same thing that we do with crypto with dividend paying stocks as well, to kind of position and reposition and take profit and buy bottoms and stuff like that. All right, so enough about that. So I'm going to go back here. I'm going to go back to the portfolio, and I'm actually going to show you guys this, the different positions that we're taking here. So whoops. And just so you guys know, all of these stocks on this list, we used to have every single one of these. Okay, these are all dividend growth stocks. Yes, we used to have all of these. And then we started to realize, like, in order to retire on dividend growth stocks, you really, really have to have a lot of money, like $500,000, $1 million, a couple $1,000,000 to be able to retire off of them. So we kind of change our strategy to compensate for that. And we'll eventually get back into dividend growth stocks. It's just not going to be anytime soon. So average cost before this buy was $7.30. It's now $7.06. You can see the share count here, 288.76. Cost basis, all that jazz. So basically, this is going to come out to roughly about $29 a month of passive income at these lows, which is always a good sign because dividend investors love buying the dip. And yeah, that's kind of what's going on with the ACP. And PDI, we are not currently positioned in this one, but we are going to get back in it because, again, if there is more upside, then, we want to be in before the stock gets too expensive. So, yeah, you can see a pending buy here for $1,839. Current price, $20.22. It doesn't necessarily have to bust out of that resistance, but it's looking pretty strong. So Yeah, the average share price before was 1872, so that's going to go up. Again, if it comes down, we can just average back into it. All right, so I'm actually going to go over the numbers before we go over the details here in the portfolio. So dividends received this week, we already went over the M1 stuff. So FEPI, $109.33, TSLP, $41.26, YMAX, $60.48, QTTE, $27.42, XDTE, $14.80, YMAG, $41.12, and AIPI, $148.67. As you guys know, YMAX and YMAG now pay weekly. Okay, so that total for just the dividends paid on Robinhood, $443.08. So we did open a new Riot. Again, that's a Bitcoin miner. Riot Platforms or Riot Blockchain, whatever you want to call it. Ticker symbol is RIOT. We opened up a new call debit spread for this one for $300. The expected profit is roughly about $5,700 or $6,000, somewhere in there. I'll get into that in a minute. So we also sold Snap. Okay, we got out of Snap and we got out of TMF and put the funds from TMF into QDTE. There's two reasons why we did this. Number one, because I left the job that I was previously at because I got tired of their BS. I'm sure those of you guys that have worked in toxic work environments with toxic coworkers, you understand perfectly what I'm talking about here. So that's reason number one. Reason number two, it's becoming more and more apparent to me that the likelihood of a recession is going lower. Okay. So it's decreasing in value, meaning that the soft landing narrative is gaining in probability, which means there's no real reason to hold TMF. TMF will go up in value regardless of whether there is a recession or not. In my opinion, there's not going to be a recession, but TMF, you guys got to understand, TMF is not a recession-based play, okay? TMF is basically a Fed pivot play. So the whole basis behind people buying TMF is when the Fed cuts rates, the value of bonds, not bond yields, okay? Bond yields and bonds have an inverse correlation. Bond yields, bond price have an inverse correlation. So when the Fed raises rates, bond yields go up because it's a safe risk off 5%, 6%, whatever it is yield. Bond prices come down, okay? But when the Fed cuts, the opposite happens. Bond yields come down because, again, when they cut rates, the passive income from the yields on bonds come down. The savings interest on interest or savings accounts with banks, they come down. Certificates of deposits, they come down. And the cost to borrow comes down. Okay, auto loans, mortgages, car loans, those all become cheaper with time too. But it depends on which side of the fence you're on. Are you a consumer or an investor? In an investor's case, these cash equivalent yielding accounts are paying less and less and less as the Fed cuts rates. And then the bond prices do the opposite. Okay, so the yields come down, the bond prices go up. And so people get into TMF because TMF is basically a bond play. Okay, when the Fed cuts, bond prices should be sitting at all-time lows or pretty close to it, and they basically, it's an asymmetrical bet. Okay, so basically the thing's going to go from the all-time low to all-time highs. Okay, and usually when the Fed stops cutting rates, or they're pretty much about done cutting rates, that's when people sell out of bonds for the capital appreciation or bond equivalents like TMF and TLT. So that's what's going on with that. And then we already went over the dividend paying stock profits. So let's go ahead and take a look at the actual positions here. All right, so I'm going to go down to FEPI. Still hasn't fully recovered the price yet, but again, once the NASDAQ snaps beyond, NASDAQ's been kind of lagging S&P lately. Once it snaps beyond its previous all-time highs, this thing should go well past $56. So $109.33 here on FEPI. You guys can see just 16 hours ago. TSLP is another one. We do actually want to buy more of these Curve Invest ETFs, the single stock ones, but we're just going to kind of not hyper concentrate, but focus much more strictly on just kind of positioning into just maybe a handful at this time. So TSLP is in profit. Tesla's been an absolute rocket lately. I don't know if you guys have seen that, but Tesla's been very bullish. So $41.26. I think it has something to do with it's like a robo taxi event or something like that Elon Musk is supposed to be hosting next month, if I'm not mistaken. Again, do your own research. Don't quote me on that, but I'm pretty sure that's what's going on. So YMAX here actually holding up quite nicely. I'm impressed. So $60.48. Again, that's weekly. So, if you basically do forward estimates on that monthly, it's roughly about $240 a month. Let's see here. QDTE. So we got that 106 shares, or roughly about 100. What is that? 107 shares. So only down 8% on this one, which is definitely nice. You can see the buy here from the TMF. That's $287 buy. And then the $27.42 in dividends, which again, on a monthly basis would equate to just under $120 a month. Okay, so going down to XDTE, and we still got to add more to these. But again, XDTE, or the S&P is sitting at all-time highs, which is fine. But we want to be buying the dip on this. Again, look, I'm expecting the S&P and the NASDAQ to go to all-time highs in the end of the year. I'm not expecting really another dip buying opportunity on these indice-related plays, probably until I don't know, it's hard to say. I mean, maybe it happens next month, but I'm not so sure, honestly. If it doesn't happen next month, then probably sometime next March, next April. So XDTE, barely down, 0.72%. That's nothing. So $14.80. Again, estimating the passive income out in time would be roughly about $57, $58 a month, somewhere in there. Okay, going down here, YMAG. All right, so this one's down only 11%, which again is not terrible, not great, but not terrible. But of course, we're still kind of in that uncertainty phase between now, the data reports, all that jazz, earnings, and the elections. Look, I think everything's going to be fine with that. I'll be doing a live video later today to kind of discuss that with y'all. I don't think there's any real reason to worry. It might be a little choppy in markets in between now and then, but I think overall the markets are going to go up into the end of the year and next year. Okay, so $41.12 from YMAG. Again, this comes out to about $165 a month. And the last one on the list here is going to be AIPI, and then I'm going to go over the TMF and the call debit spreads with you guys. So AIPI kind of lagging behind a little bit. Again, NVIDIA has been getting kind of a little smashed. I'll show you guys that on the chart as well. So down 6%, not a big deal, $148.67. As a matter of fact, I will show you guys exactly why I think NVIDIA is pulling back. I don't think it's anything to worry about. It's just technical. You guys got to remember here, a lot of traders and investors and whales looking at these same charts we're looking at. And, basically anybody that bought down here at the bottom of this triangle pattern at $90 or $103, they may be looking at this thinking, if it doesn't break out, let me just go ahead and take some risk off the table. I think that's all this is, okay? Markets were generally kind of slowly bleeding out on Friday. Not a big deal. It's probably just some profit taking into the end of the week, and we should see Monday. Hopefully, it should be green. Is what I'm thinking. So they'd probably just take some profits in here, thinking like, oh yeah, if it pulls back to 110, I'm going to buy more, right? We're doing essentially the same thing here. So just we put on a put yesterday on NVDL as it was kind of pulling back. So. All right, last couple of things here. TMF. Okay, so you can see we got out of TMF here. And going back here, I actually want to show you guys this call debit spread. So let's see if I can find it here. Okay, so Riot expiration 3/21/2025, 60 call debit spreads with a strike price of basically $20. The interesting thing about call debit spreads is that actually does not even need to go above the top strike price to be in profit. You can see the break even here is only 1905. So anything above and beyond 1905 is actually in profit. Okay, so you guys are probably wondering, well, why did you pick January for one and March for the other? Okay, so I'm going to show you. So last cycle, you can see that Riot hit kind of a small peak here in January. Okay, it went to $30, but then it didn't reach its maximum profit until about February or March. Okay, so that's the reason why this one is in March and CLSK is in January. So you can see we kind of hit that $20 also in March of 2020, and again, let's see if I can find it. So roughly about December to February, right around that, not quite at 20, but right around that $20 level in earlier this year. So CLSK, the vast majority of these are for January. So you can see we kind of hit a small peak here in January and then got even higher up in February, March. But in the previous bull run, you guys can see that we actually took off and hit all-time highs in January, and then again we topped out roughly in this March timeframe. Okay, so that pretty much covers that. And I'll just show you guys the cash secured put on NVDL. This is basically for about $125 to $150 a week in passive income. So strike price 59. Do I think it's going to expire below that? No, I don't. I think NVIDIA had some profit taking into the end of the week, and it's likely just going to go higher next week. Again, the expiration for this is next Friday. All right, so the last thing I want to go over here with you guys is the cash secured puts. So NVDL 924 entry, these are all cash secured puts, by the way. Exit date 927, $105 is what it cost. Closed early for $40, so made about $65 in profit on that one. Again, NVDL 925 cash secured put, exit date 927. Premiums paid was $95, and the cost to close early was $20, so that's about $75 in profit. NVDL again on the 26th was the entry date for cash secured put. Exit date is going to be next Friday, 10/4, and then $150 times one contract. Okay, so in terms of options premiums received here, I believe this is the number. So $290 in premiums this week. And then, of course, we have the M1 Finance. And this, I need to add $349 to this. So this was the PDI and Enbridge profits, so $59.52. So then the total here would come out to $809.62. So, and again, I didn't have to go into work to make this. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.